Good morning. So this is going to be more of an informal video. It's going to be about what this channel is about. It's going to be about, why as buyers agents we feel we can provide value for people looking, especially to buy investment properties, because that's pretty much all we do. There's a lot of buyers agents out there at the moment, and you're probably asking, what's the deal with these buyers agents? Why are they always recommending to use their services, etc.? So I'll just do a little bit of a breakdown about what we do. So obviously with every investor out there, everyone has different goals, they have different needs, requirements, budgets, rental return expectations. Potentially they want to develop. There are a lot of different things that you might want with your investment property, and it's entirely based off you. So we ask a bunch of questions, about 80 questions. We get an idea about your long-term goals, and then we work backwards from your long-term goals. So let's say, for example, you want $200,000 cash flow from a commercial asset, let's say in 10 years time. That might be your long-term goal. Sorry about the camera, it's gonna shake a bit. And then we work backwards from there and we map out how many properties, what sort of properties, at what sort of growth rates, what sort of rental returns that you're going to need to acquire in order to move towards that goal. So I guess it makes sense. So we take that from you, and then we use our understanding of property data. Now, it's no secret, property tools, property software, due diligence tools, analysis, suburb analysis tools, they're all available now. You can access them, and hopefully on this channel we can try to, if you do subscribe, we can try and help you as much as possible, because not everyone's going to be able to afford to use a buyer's agent or outlay that sort of funds towards an investment specialist. I would argue that it's probably a smarter idea. I mean, if you don't know what you're doing, especially, then obviously, get some expert help, but do your due diligence on the person that you're asking for help from. But yeah, hopefully on this channel we can, sorry, a side tangent, but hopefully we can try and help you as much as possible. You have any questions, which areas to buy, what to look out for, whatever questions you have in regards to property investment in Australia, we can try and answer. So just going back to the process, obviously we ask the questions, then we use the property data analysis to shortlist the suburbs that will meet your goals, budget, etc. Once we select the region with you, alongside you, obviously we give you all the information, and then we tell you this is where we recommend and here's why. Once you've decided that, then we move forward to the sourcing process. So I would say this is probably the most time consuming out of the whole property investment, acquiring investment property process. This is the most time consuming and can be one of the most difficult. Now, if you're not concerned about how well the property does, and you just want it to grow, and you don't mind if it grows at the average rate, then you can pretty much choose any property. As long as you choose the right suburb. You could even pick one on the main road, but the only thing is, it's not going to grow as well as the other properties on quieter streets and better locations or better pockets of the suburb. That's completely up to you, the standard that you want to apply to finding investment property. But for us, we're trying to find the absolute best, right? So, we have obviously an extensive list of do's and don'ts, or things to look out for us to even consider a property. And once it passes that checklist, we then present it to you as a client of ours. We present it to you, we give you a big report, nothing too overwhelming though, just enough to sort of get a really good understanding about why we've selected it. Now, in regards to once you're happy with the property, so you tell us, I gotta fix this up. So you need to basically understand why we're buying it, and once you've understood why we're buying it, hopefully you're in a position to say yes or no. And then you say yes, okay, yep, I'm happy to proceed. Then we start the negotiation process. Obviously, we give you a price range based on comparable sales in the area about where we expect it to fall. Obviously, we want to get you a discount, so we want to get into the market, but I just want to sort of emphasize that the quality of an asset, like usually when you're buying a really hot asset or a good quality asset in a good suburb, the chances of getting a significant or substantial discount is not, it's not always achievable. And I know that, you know, every person on the sun, you know, when they're trying to buy a property and they're really into property investment altogether, they're always trying to get a discount, but you really should be trying to find a property which is a great asset, good quality asset. I can always get you a discount on a main road asset, but we're not going to buy that for you. So I thought I would just mention that, because the focus here is the good quality asset. Even if we're paying, so for example, if you're in a hot market, for example, and the market's moving, and we, let's say, source a property off market, which is not listed online, and we purchase that at market value. So let's say it's worth 550, and then we bought it for 550 or 555. You might be saying, oh, you know, you're paying on the money or slightly over, like, why am I using your services, etc. Like, I've had people say that to me before, but they don't understand that if that property was to hit the market, it would sell for 570, because it's a completely, it's a very hot market. So these are the sort of insights and questions we get, we can answer them as well. So I just want to emphasize that some people, they're very, you know, stuck on trying to get that discount, and unfortunately they don't end up buying the greatest asset, and it just makes sense. Sometimes though, you can, don't get me wrong, you can still get really juicy deals off market. It's just that they're very rare, especially in some of those competitive markets. I thought I'd mention that. So anyway, let's go back to the process. Sorry for the tangents there, but once we negotiate that deal and we secure it for a price, obviously we bring that to you and we say, hey, this is what we're able to get it for. You give us the yes, then you sign the contracts. You're now on the contract. Then we project manage the rest of the process, which is basically liaising with the broker, liaising with the conveyancer, also, you know, organizing the building and pest inspection. If anything comes up in the building inspection and have legal grounds to negotiate, we do that for you as well. Helping you find a good property manager that will find you a good tenant. Look, and this comes back to building inspectors too. I thought I'd just mention that, like, not all building inspectors are the same, and especially the cheap ones, they'll do what they call in the building space a tick and flick, which is basically where they just walk through the property and there's like a checklist and they just go, yeah, there's no cracks, da, da, da. They don't really do a thorough report, and sometimes this can be to your disadvantage. And I'll just give you an example here. When you're going to when you get a building and pest inspection report back after you purchase the property during your due diligence period, and there's not that much detail, it's very difficult to renegotiate off the back of that. So for example, we have some really good building inspectors we work with that are extremely thorough, and even the real estate agents, the sales agents, they always tell us, oh, this guy's a headache to deal with, he's the worst. Well, for us it's the best. But basically, they'll come back with a whole list of tiny little things, and if they're very, very, very critical, they'll classify a lot of these items as, for example, major defects, or they'll classify them as needing extra, like, you know, immediate attention. It gives us a lot of basis to negotiate. Whereas if you get the tick and flick and it's just like yes, no, it's sort of hard to describe to the sales agent that we need to, you know, reduce or get it rectified. So that's just something I thought I would mention as well. We have our connections there. And also from a property management perspective, like a lot of property managers, they just want to get you on the rent roll. They just want you on their books. They just, like, a lot of property managers are like that. It's really difficult to find a thorough and diligent property manager who really assures that, you know, that your house is getting looked after, that you're getting good tenants in the door, that you're proactive, like they're proactive. Like, for example, you know, if something comes up in the, you know, the regular inspection that they do for property management, they'll immediately report it and tell you, like, you know, this is, you should get this fixed, because if you don't get this fixed, it can lead to this. Whereas some property managers, they just take photos, they just walk out, or they'll send someone that's not even a real property manager to take some from their business, just to take some photos, and it's like, yeah, it looks pretty like much in the same condition. So anyways, moving away from that tangent again, sorry, we get to the final process. We obviously settle, we'll attend the pre-settlement inspection, and yeah, we'll make sure everything's the same as when you first offered on the property. Now, if anything it does come up and it's not how it looked like at the start, you can sort of pause settlement, and from there you can try to get these items rectified. But anyways, once you're settled, We'll again help you, guide you through getting a property manager, finding a tenant, and then 6 monthly, 12 monthly, we'll review your property's value and basically tell you that, you know, now's the time to sort of extract equity, or now's the time to sell, or now's the time to do X, Y, Z. So I hope that sort of clarifies our process. Sorry for all the tangents. I think there's a lot of value in creating a long-term plan. So, I mean, of course, we are heavily focused on the data, conducting the due diligence, you know, doing all the stuff on the ground to actually secure the property. But I would say a lot of property investors that come to us, even the really sophisticated ones, or the ones that have done very well, and maybe some of them just have a lot of money, so they just can buy whatever, and it doesn't really matter if it goes wrong. But a lot of people who've done well for themselves, they don't actually have a plan, right? So if you don't have a plan, you don't have a goal, sometimes you can just sit on a whole bunch of money and you just, like let's say you purchased one property and it went up in value, and then you're just waiting 2-3 years when you could have extracted equity 2 years ago, purchased your next, and you could have built your property portfolio much quicker. You could have built your wealth a lot quicker. And sometimes if you don't have a plan, you don't have an end goal, you don't have a timeline, it's just sort of your aspirations just flail in the wind. You know, nothing's really happening. So I think what's really crucial and important is to develop a long-term goal, because I mean, you can just be short-term and say, I just want $200,000 growth in the next 2 to 3 years. That's fine, but then you still need to have a plan beyond that. Because look, I thought I would just mention that. A few other things as well. A lot of people mix us up with people who sell new builds. We don't touch new builds at all. I get it, back in the day, people used to make money in building something new and it went up in value, but because of the build costs nowadays, it's just really hard to manufacture any equity there, especially in those new estates. Like we won't touch new estates because there's too much supply, too many homes to choose from, which means less competition, which means less growth, and there's no infrastructure, etc. Those sort of areas will be good in another 10, 15, 20 years, but not right now. We're really focused on very short-term growth because and established properties, because that's what propels people's investment properties, investment portfolios forward. So I thought I would mention that. Stay away from new builds, stay away from stay away from new builds, stay away from new estates if you can. They will mess you up. They'll put your property portfolio on hold. So try not to get involved with that stuff if you can. Another thing I thought I would mention as well, moving into 2026, affordability is becoming a key thing, a key indicator for growth moving forward. We're finding that, of course, blue chip locations are always going to be doing relatively well. Places in a metro, very tightly held, of course. But then you've got entry points of above 1 mil. That's not very realistic for a lot of beginner investors or even intermediate investors, and it doesn't even make sense from a cash flow perspective, especially with the current interest rates. So and I know there's also a bit of a misconception about buying regional versus metro, right? So I'm telling you, look, we've been doing this we haven't been doing this for too long, for just over 5 years, but we've been involved in multiple property cycles. So, Adelaide, WA, Queensland, and now moving to Melbourne and even Tasmania, regional Victoria, Tasmania, etc. They're doing quite well now. So we've been watching these markets and studying them for a very long time. And by the way, it's probably not I should have said this at the start, but I've owned a buyer's agency, run an investor buyer's agency for the past 5.5 years. We've purchased over 300 properties for our clients, and the average growth rate over the first 12 months is 16%. We actually have a guarantee where we do double-digit growth in the first 12 months, all your money back, on also 30-day change of mind if you're working with us and you don't like our process. Look, we're very confident with what we do. And we feel there's a lot of new buyers agents, which is okay. Some of them come from different backgrounds. Even though they are new, they're not necessarily bad. I think if you have good intentions in your heart, like if you have good intentions for someone, and you maybe you're a religious person like myself, you don't want to do wrong by other people. Like I think if your heart is good, you'll be very careful about what you recommend and what you advise to buy. But anyways, I forgot what I was trying to say. Yeah, anyways, I forgot what I was trying to say, but oh yeah, just a little bit about myself. Again, we've got those guarantees, we've got those promises, because there's a lot of people out there that maybe aren't as good or don't have the greatest recommendations, and we just want to give people that assurance and that confidence. So yeah, if you do decide to work with us, please, yeah, if you want to work with us, please give us a call or give me a message. I'm on Instagram. You can contact me there, LinkedIn, Facebook, etc. I also have a Facebook group on, yeah, I've got a Facebook group which we put our excess off-market properties in. Now again, if you want a holistic approach to property investing and you want it to meet your goals, obviously engaging our services is probably the best way to go about it, so that we can do things properly for you. But there's other options out there. So you can subscribe to this YouTube channel, you can go on my Instagram. If you really want to learn about property investment, I would recommend subscribing to the YouTube channel, because what we're going to try and do moving forward is grow it so that it teaches you basically the ins and outs of property investment, and like without holding anything back. It's no secret. Like if there's people out there charging $7,500 to do a course just to teach property investment, which is, I think it's a good thing. It's not a bad thing, but I aim to try and do this all for free, because honestly, it's hard work. I'm not gonna lie. Finding an investment property for people, especially if you hopefully have the good intentions for the people you're working with and you're not just money hungry, it's really hard. And I'm the type of person where obviously you have to be decisive in, if you're looking at property, especially in hot markets. I've learned this over the years, and you have to be quick to pull the trigger. But I am extremely careful about the type of asset that I buy. Like, people are paying you to acquire high quality assets, and that's what we hopefully will put forward to you. So but anyways, yeah, subscribe to the channel if you'd like. Put any questions, please let me know what sort of questions you have, because everyone has different challenges, and yeah, I'll try and answer as many questions as possible. I do have a few team members as well, which are my business partners actually, that can also provide some value later down the track. But in the meantime, feel free to subscribe, and yeah, I look forward to seeing you on the other side.